Hi, this is Andy Tuttle, branch manager at Oak Mortgage Group and host of Tuttle Talk here again with your weekly market roundup. Remember, I do this every week because, hey, I want you to be financially free. I want you to have peace of mind about home ownership, and that starts before you ever buy your home. It starts with seeing your mortgage as the tool that it is that can help you create wealth over time, and that includes everything that goes along with your loan and your lock strategy. If you're armed with good, timely, market-based information, I know that can help you make better, more confident decisions about your home ownership, about your purchase decisions, and how you structure everything. And that can save you tens of thousands of dollars over time. Remember, if you want to get on this weekly update, you can text the word Roundup to 469-319-0660. It'll go right to your phone, and this is in the description below if you're watching this on YouTube, and it's also on the Facebook post and on the website, etc. You can also go to andytuttle.com to get all kinds of good advice from local experts on real estate, finance, mortgage, etc. So I hope you enjoy that and get a good resource there. Now let's do the short version here and get you into these numbers for last week and this week. Last week we saw a weaker than expected industrial supply and a weaker than expected jobs report, and that are jobs numbers. The major job report only comes out once a month, but that helped the bond market have a little bit of a push into the middle of the week after a rough start, and that helped bonds stay unchanged. So mortgage rates basically stayed unchanged. Janet Yellen also spoke today at 10 a.m. Eastern, and she basically said, and I quote, expects a great deal of continuity in the Fed's approach to monetary policy. So basically, steady Eddie, steady as she goes right now. So that's good to hear. Now, we know that quantitative easing is tapering, and yet we've still seen some strength in the bond market. Let's go to the charts and let me show you why that is. Now, we've seen this, you've seen this before from me, but we can see as QE, quantitative easing, as this started, this is a 10-year Treasury yield. This is good to see what rates are doing over time. It's not great to look at on a daily basis if you're trying to see what rates are going to do, but it's great to look in retrospect. And you can see when these things, when they start, we see a little improvement in rates. When it ends, we've seen improvements in rates, and actually, so when tapering begins or the easing ends, we have still seen improvements in rates. And there's a few things that contribute to that. One is that the stock market actually has struggled each time that tapering has ended. They haven't liked that, but that money has found its way into the bond market, which has also supported bonds. However, bond prices are still under some pressure, partly because of good outlook for small business owners. So as we continue to see some increases in the economy or improvements in the economy, that's going to put pressure on the bonds. Let me show you that chart too. That chart, this is a price chart, so it's an inverse relationship. The higher the price, the lower the rates. You can see how this last week we saw some of those, we saw some improvements, but then it kind of leveled off in the market. And so right now we are in this kind of a trading range here. And we've looked right here. If you look at the top here and the top back in November, this is what we call a double top. So this is a very interesting spot in the market. We're going to be watching that for you and keep you posted on what's going on. And remember what this does to your purchasing power. Buyer's purchasing power. Right now, you want to watch this and put yourself in a position to lock, because 1/4% in rate, look at this, as rates go down, if you want to look at this range, over here, you can get a $400,000 home for roughly the same payment you could get a $360,000 home at a point higher rate. So there's a lot of purchasing power at stake here, and we want to make sure that we're arming you with the ability to either purchase more or save money on the current purchase that you're making. So put yourself in a position to do that by being ahead of the game. Remember, you can click this link and get ahead of the game if you want to. The link in this description or the link in the Facebook post, and you can find out, you can get your free loan cost analysis report. If you want to buy or looking to refinance, you will be able to put that information in there and get a free report that looks something like this. And that will show you everything you need to know about the decision that you're making, so you can make some of those educated decisions. So I'm here to help. Thank you so much for tuning in, and I hope you have a great week, and we'll talk to you soon.